Okay, so we're doing a bit of an account update today, but I'm gonna take you on not an account update at the same time, okay? So one of the things that people ask me a lot of time is like, Erica, do you keep money in cash? Do you trade any of these speculative stocks? Do you ever break your rules on like these stock holdings and stuff like that, that those stocks that don't like fit all of your metrics for that stock picking? And the answer is yes. Okay, yes, I do. I make exceptions here and there. The account that I've been sharing with you that I'm taking from 250K to a million, that account I am trading in like a really conservative way with really conservative stock picks for the most part. It has some speculative stocks on it that are high premium. And if you want to go back and watch some of those videos, I really invite you to do so. But the growth on that account is going to be fairly slow. And so that's just the nature of the stock picks that I've made there. I'm trading that account in sort of like a very responsible, low risk way. Okay. Now, how do I not trade that way? Okay. So what I do is I have other accounts and I like to put money in other accounts that I trade differently because that gets my mindset to change when I go into that account. So I don't like to have a $1.5 million account and have all of my trading styles in the same account. So what I'm introducing you here to you today is to say that I have different accounts. I have 8, really 8, that I trade in different styles. And those styles get me different results based on what the market is doing and based on what the stock picks are doing within those accounts, okay? So this account is actually like a high risk account, I would say so, okay, that I'm sharing with you now. And the results are pretty fantastic, okay? That's great. That's great. I also know that this account is subject to major drawdowns. And that it's sort of like one of these accounts that's going to work out a little bit on a wing and a prayer. This 85K account value is something that I've grown this account to from not contributing 85K, like at all. Like it's grown a lot, mainly because I've been trading ASTS since it was $5 a share. It's now at 37 during a significant pullback. Like this stock has been up to like $55 a share. And it's going through a significant pullback right now on September 9th. The charting on this says that it's probably going to go up to something like 80 soon in the next year and a half. So I'm just being patient with this and I'm growing with this stock. I own a ton of leaps on this that'll take you through and look at the account right now. But I'm running tons of diagonal spreads. I've got loads of put credit spreads in here. In the past, I've done a lot of call credit spreads on that. HIMS, I've gotten out of that. You can see I'm just only have 100 shares, so I'm leaving that stock. I don't like it as a pick anymore. For this account, Ionic, I'm trading a bunch of diagonals and covered calls on that as well. And then the other stock that I'm trading is Palantir. You guys, sorry for the interruption there. I've got seriously just a mild case of COVID right now. My husband has a horrible case of COVID, but I have a mild one and I keep coughing. So, and I'm still recording videos. What's wrong with me? Anyway, I'm trading Palantir as well, and Palantir is going through a pullback. So this account isn't at the heights that it has been, but I'm quite happy to share the results here. Okay, so you can see again, I've got like loads of trades here. I also trade like a lot of the margin on this account because my results are what they are. So this is what this account looks like. I started it in November. And you can see just the results here. It's up 76%. Now, okay, it's up 76%. When we were in here in this blue range, it was up more like 108%. Okay. I don't trade all my money this way. This is too high risk for me. The results are absolutely fantastic. And it's tempting for me to sit here and go like, you know, I want to take more of my money and put it in an account and in this account and trade it in this fashion, but I simply won't because these stock picks are not like tried and true stock picks. They're somewhat newer stocks that could have bright futures and they could also just kind of not work out. I mean, Palantir maybe not, but hood and ASTS and Ionic, maybe so. I'm thinking I'm going to add hood in here and sort of get rid when I get out of that HIMS position. And I'm going to be taking more of the premium that I'm getting from this account, and I'm going to be putting it probably into hood. The reason I'm going to be putting it into hood is because it has just been included as a member of the S&P. And usually stocks that are in the S&P, that join the S&P, get an 18% on average raise in the next 6 months. I think that if we get a good market, hood could do better than that. So that's kind of what I'm doing. Again, these are sort of like speculative moves. I think the hood move that I'm talking about is fairly educated and studied, but I think you're seeing my point here. So I am just trading this account in a very aggressive way with some speculative stocks that's having fantastic results. Overall though, my 250K account that I am working on, it's going to grow maybe much slower than this one. It's also not going to be as prone to these major pullbacks. So do you see these huge major pullbacks here? This is when my account, when I have a significant amount of leaps and the account, those stocks like fall down for a certain period of time. Okay. When I'm starting an account, okay. Now you can look at how I still have a significant amount of leaps, but the account is more established and it has more, I still have the same amount of leaps, but those stock picks have been good. So when the stock is experiencing a pullback, it's not as significant because those stocks have grown so much. So anyway, again, this video is all about how I, as a trader, have multiple accounts, okay? And I go into trading those accounts with a certain mindset. This is an aggressive account that I have. This is probably my most aggressive account that I have. It's high risk. I've kept the amount in this account being at, I probably put in 30K to this and now it's grown or more, 76%, whatever the math is on that. And I put money in here from time to time. I don't contribute that often to it because it's just growing on its own, but I make deposits to it in a way that is studied with my other accounts. So I'm more likely to put money in my conservative accounts, or I'll put more in the conservatively traded accounts and less in this one to keep things sort of balanced out with an allocation that I feel very comfortable with. Okay, so I'm sure this is going to cause all sorts of questions down in the comments, and I'm happy to answer them all for you. But I do find that keeping money that you trade in a specific style in a certain account helps you enter that mindset when you go into that account to trade it and leave that mindset when you leave it. So this is my, hey, Erica, you get to be aggressive and kind of crazy in this account, okay? And then I have other accounts where I'm like, okay, time to put on your responsibility hat. Okay. I'm still not buying though in this account like a short dated call. Like that's too crazy for me. That's too crazy. What's crazy about this portfolio to me, is simply the stock picks are higher risk. Okay. And I believe they'll have a big payoff. I could be wrong. Okay. And I'm okay with that, putting this amount of money of mine at risk to get this sort of result. Okay. So I'll see you in the comments if you have any questions.